Jenny, Amazon, I'm sure this is a popular one on Twitter.
It is a popular one on Twitter and a popular one on the street. Of course, this is a huge name. We have big earnings all week. It's been a very easy week on social media because everyone tweets about these names. But the thing with Amazon is it all is about shipping. With competing with a Walmart or a Target, you know, it all comes down to who can get their product there the fastest.
The last mile.
The last mile delivery, exactly. And it seems like Jeff Bezos has become nearly obsessed with this same day or next day delivery. And of course, we saw this weighing on their margins in the last quarter report, and they got punished for it because basically right now they're burning into these margins because they're spending so much money trying to get the product there as soon as they can. But also the consumer has become really thirsty for getting the product like their same day. I mean, it's wild how demanding people are about this stuff. So that actually brings me to our first tweet, which says, Jeff Bezos, make option for same day pickup at your hubs. You could create an entire pick team that just does same day orders. Amazon always has the best prices, but sometimes you need it right now. And go to Walmart or Target to get it because it's quicker than waiting 1 to 2 days for shipping. So I mean, these are people that are complaining about 1 or 2 days for shipping. It's craziness.
And they want it for free.
And free, yes. I mean, this isn't actually a terrible idea, but Landon, I was curious if now being not a traditional brick and mortar is actually punishing an Amazon, because it seemed like this used to be a bright spot for them, but now it's like, it's not there fast enough.
Exactly. That's a great point. Imagine if they had 5 or 10 stores in every city, just like Target and Walmart do. They could achieve this goal, just like Crystal's talking about. And this is a trend that we've seen at LikeFolio. The American consumer is getting very greedy. They want it now. They want it free. And all of a sudden, Amazon's not the only player that can offer that because, you know, Target and Walmart, we've talked about this, they've kind of took their time getting to this point. But now all of a sudden, they are competent at delivering very quickly. Or if you have to have it right now, sure, come on by and pick it up. And of course, that's free for them. There's no shipping required. You just have to have someone pick it off the shelves. And so, yeah, the American consumer is getting greedy. And I think Amazon sort of created this greedy beast in, 2-day delivery 10 years ago. It was a fantastic offering, and everyone sort of got used to Amazon being the go-to. But now all of a sudden, it's got 2 major competitors that we sort of all wrote off, right? We thought that Amazon was going to crush Walmart and Target, but I think that now they're very confident and they're coming for Amazon.
Yeah, soon it'll be, Dear Amazon, use AI to determine what I think I want for dinner and then get it to my house before I get home.
Yeah, get to my house by 5 p.m. I mean, the consumer has never been greedier when it comes to getting you their stuff faster.
So Landon, it turns out that delivering something in 1 day costs money. Who knew, right? They spent $1.5 billion over the holidays to get these products in 1 day delivery. It cost them $1.5 billion, $800 million the last 2 months before that. So they're spending money, and the stock is showing that because it's gotta show up in the margins, right? You can't spend $1.5 billion on 1 day delivery and have it not show up. That's what I fear we may be coming to in this earnings cycle in Amazon. I want to know, are you guys seeing anything like that? Are you seeing any red flags in some of the data?
Yeah, so I mean, think about what the market's done in the last year and a half. Stocks have been going crazy, but Amazon peaked a year and a half ago, and it's just kind of hanging around there. So it is coming up on this margin problem. Expenses are a big issue. We're measuring revenue. That's our primary tool, the primary thing that we're able to do. But definitely, expenses is huge for them as shipping gets more and more expensive as the American consumer demands more. We do see that on a year-over-year basis, we've got purchase intent up about 18%. I think the street's actually calling for a plus 19%. So huge gains expected out of Amazon, up from $72 billion to $86 billion. But we're kind of in line there. And actually, we've got some metrics that measure the pace of growth based on what we believe are expectations. And that comes out with an earnings score that's actually negative for us. It's slightly bearish on Amazon for this earnings report based on what we think is going to happen versus what we think expectations are. And it's tough for Amazon because, like I said, they have created this. They were the leader for so long, but now they've got a lot of competition. If you look at all of their different business models, they've got AWS, and that's being competed with very well by Microsoft Azure, and they just came out with fantastic earnings. You got Whole Foods, which was supposed to dominate Kroger. That didn't happen. Amazon Prime TV competing against Netflix, and now Disney and Apple. It's just, they've got a lot of fights that they're trying to win, and I think that their core business is the one that is starting to struggle as people sort of realize that, I can get a better deal at Target and Walmart. I can pick it up today. I can get it today. it's a tough time. I think long term, I'm a little bit turning bearish on Amazon.
Landon, I'm glad you bring up AWS because as we look at the company profile here, we still think of Amazon as this powerhouse in e-commerce, which it certainly is, but 46% of their revenues now, according to this Trefis data, comes from AWS. The last couple of years, growth has really been in their cloud segment. And so when you start thinking about Microsoft as a formidable competitor in that space, to your point, and all the other battles that they're facing within their businesses, I think you make a really good point in terms of, maybe Amazon is struggling a little bit here, but it's still a powerhouse in every one of these businesses. So its underperformance maybe over the last year or so, at some point, it's got to, you figure at least participate in some of this overall market rally.
Yeah, sure. And I will say that as far as the cloud services go, I think that's probably more of a rising tide type of deal where everyone's getting a larger pie to split up, and maybe Microsoft's taking a little bit larger piece of pie, but the pie is growing much faster. Whereas with the retail business, I think that, yes, it's growing, but I think that the pace at which Target and Walmart are taking away from Amazon is a lot more concerning than the pace at which Microsoft's cutting into that market share. And when you look at PE ratios, Amazon's around 82 right now. All these companies that we talked about, it's competing against, Target and Walmart, 18 and 23, Microsoft's in the low 30s, Kroger's in the teens. The only one that competes is Netflix, around 82. So that PE ratio is extremely high. So Amazon's really priced to perfection here, and they've got a lot of competition swinging at them.
I have to take the bullish case a little bit here, Landon, because you're saying you're a bear. But I mean, I don't know. If you look at Microsoft's earnings, Azure had one of their best quarters ever. They had blowout fourth quarter. So this could possibly mean a really good thing for AWS. And we have to consider the fact that Amazon had one of their best Cyber Mondays of all time. So they had a really, really strong holiday season, and that will go into this earnings. So I had to find, of course, a tweet that was a bull because I'm passionate about Amazon. So our next tweet is from Jeff Richards, who says, ordered products directly from a few brands recently, and the shipping experience is terrible. Weeks to deliver, hard to track, etc. Makes you realize how good Amazon is and how well they understand consumer experience. Long Amazon. So, they had a stronger than ever holiday season. You saw in UPS's fourth quarter results, actually, they reported they were boosted by Amazon demand. So these are all really, really strong things for Amazon going into this earnings. And people are happy with Amazon. You have people like me that only order off Amazon. So I have to think the consumer is still pretty happy with Amazon.
Yeah, they are. They're very happy. And you know what? I'm still Amazon only. When I buy something, I just go to Amazon.com. I haven't converted yet, but we kind of talked in the office, and a lot of people they've switched over to Target's mobile app. They love it. But speaking to happiness, when we talk about consumer happiness, Amazon's right at 69%. Target's right there, just behind them at 68, and Walmart, of course, falling very far behind at 53. That's people talking about going into the stores or using the shopping experiences. I'm not surprised that Walmart's falling behind. But both Walmart and Target have very high purchase intent numbers, gaining market share for sure on Amazon. But I know that Amazon's doing really well. It's just they're priced so high when you look at that PE ratio. They are priced to absolute perfection and continued dominance. And if there's any chink in that armor, I think that could signal selling for investors.
Yeah. If I owned a grocery store, a local grocery store, and Jenny Horn came in the grocery store and came in and said, got a whole bag of groceries, I go, no, you just take them. Go ahead. No, of course you'd like me. Because I'm giving you, they do all this stuff for free. The question is, are they making money? I think the revenues are going to be monster. I think everything's going to be up. But the EPS might suffer because how much money they're spending to make Jenny Horn happy. It costs a lot of money to keep Jenny Horn happy.
It does, and you make a really good point because I just ordered a rug, like a 9x11 rug, and I got it shipped to me for free. And I was thinking, how are they doing this one-day delivery for free? And the thing is like 400 pounds.
8 guys
how do they do that?
Deliver to your door for free.
I was like, this is amazing.
Landon, building on this, because I think that's really Amazon's business model for the last 20 years has been, we're not focused on today's earnings, we're focused on the future earnings. But at what point is it the future? It's been 20 years. They were a $1 trillion company at some point. Their revenues are absolutely incredible in terms of the numbers that you're seeing. They're monstrous. But at what point is it time to focus on margins and just 1 or 2 days is good enough? It doesn't need to be in an hour and a half.
Right. So I think that, if you talk about 15 or 20 years ago, their whole goal was to capture the market at all costs, right? If you can go back even further than that, when it was all about books, They wanted just to capture the market and get people used to using the service, and they're fine taking a loss. And they've done that. They've done a fantastic job. However, they've got people catching up with them now. And so I think that if you're going to price them to perfection, then they've got to do something else really big in the future. And for a little while, a lot of us thought that it was going to be grocery. Maybe it was going to be streaming content. I don't think they've really executed very well on those two fronts. Their cloud services are fantastic. I'd love to show you the LikeFolio monthly bill on AWS. We're a big contributor to Amazon's top line. But yeah, it's tough because they've got so many people coming for them. And, I think a lot of the sellers are experiencing a little bit of Amazon fatigue when you're selling on there. You get a lot of generics fighting against you. You're competing against generics with fake reviews. It's tough for Amazon to keep those generics away from you. That's why Nike pulled off. And it's a bit of a sign of the times. I've talked to other business owners that have products on Amazon, and they're frustrated with the fact that you can literally search for their product and others generics come in front of you, and it makes you just want to pull off of Amazon. I think that's what people are going to do, and I'm worried that potentially Amazon is relegating itself to generic products at generic prices instead of the more premium products at premium prices where they can get a better margin.